Welcome back to EG Financials. We have new data for the housing market and mortgage rates are expected to be higher for longer. We'll start off by taking a look at the home price forecasts from top institutions like Fannie Mae, Mortgage Bankers Association, Zillow, CoreLogic, and Freddie Mac. And then we'll take a look at forecasts for the mortgage rates. Then we'll take a quick look to see how mortgage rates are trending. And then we'll take a look at actual home prices in the United States. We'll take a look at the top markets. And before we get started, please like the video and subscribe so you can keep getting these updates. Okay, let's get started. So as of March 2024, Fannie Mae is expecting home prices to increase 3.2%. Mortgage Bankers Association's expecting an increase of 4.1%, Zillow 0.8%, CoreLogic 2.6%, and Freddie Mac 2.5%. Overall, if we average these home price forecasts from these institutions, we get an average of 2.6% increase for 2024, and that's lower than what we saw last month when these institutions were expecting an average of 3.4%. Zillow is the institution with the highest revision downward in the forecast from 4.1% down to 0.8%. And if we look at the forecast that we have for 2025 and 2026, they haven't changed from the numbers that we looked at last month. And now projections for the 30-year fixed mortgage rate did go up slightly. Fannie Mae last month expected mortgage rates to end the year at 6.2%. Now they're expecting it to be 6.6%. And then for 2025 last month, they're expecting it to be 5.7%. Now they're expecting rates to still be in the sixes at 6.2%. And now let's take a look at this chart of mortgage rates over at Mortgage News Daily. A few months ago in December and January, mortgage rates slipped below 7%, and we saw a slight uptick in home sales. Then mortgage rates started to resume their upward climb in February and March, and this can be largely attributed to unexpectedly strong inflation metrics, prompting market expectations to push this anticipated Federal Reserve pivot to the latter half of the year. And here we can see it in October 2023, we peaked in mortgage rates at about 8%, and since then we saw a significant drop. But then around January this year, 2024, we've seen mortgage rates increase. And now we're starting to see a bit of a pivot or an inflection point in mortgage rates. And again, that's tied to the expectations of the Federal Reserve decreasing the federal funds rate. But overall, most expectations are that mortgage rates will see a slight downward trend over the next couple of years. Okay, let's take a look at actual home prices. The last data point that we have on here is February 2024. In a couple of weeks, we'll have data for March home prices. But as of now, we can see that back in 2022, that's when the home prices peaked. And most markets are still working on getting that full recovery back to the previous all-time highs of home prices. And overall, expectations aren't for home prices to see any significant decreases from here. The economy is strong, unemployment is low, home buyer demand is strong, and housing supply is low. So all of those factors combined are pointing towards an upward trend in home prices. It most likely won't be like anything that we saw back in 2020, 2021, and 2022. However, another issue that might impact home prices, not a whole lot, but maybe a little, is that the landscape of home ownership is becoming increasingly expensive, driven not just by the rapid appreciation of home prices and high mortgage rates, but also now by the rising cost of homeowner insurance in various parts of the US. The homeowner insurance premiums for many of these markets have seen a significant increase, and some examples are cities over in Florida and over in California, where insurance companies are increasing premiums or just overall exiting the market, which gives homeowners less options. But we'll continue to keep an eye on this data to see how it all plays out, so make sure you follow for more updates. Thank you.